What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an IMBI raw price action and technicals thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could join our cab. Details in the description below. With that said, let's begin. Okay, you guys, so we've been looking at IMBI for a few days now, and for the new viewers, this is a formation that we've currently been in for quite some time, definitely a couple months at least. So this is the 8-hour chart. This is called broadening descending wedge. And within the wedge, we've actually made the appropriate amount of tests to the resistance before attempting a true breakout. So this is actually something that I talk about often with my regular viewers and the Discord team, ARCab. 3 tests of the resistance. This is the golden rule of 3, right? So 3 tests of the resistance followed by a capitulation event or an accumulation of sorts before an attempt to the breakout, a true breakout on the 4th attempt. Now, we did touch on this candle here being the bottom and the final test of this wedge. So since then, we've actually never come back to test this bottom or yet, right, you guys? So we're actually using this resistance range that we're looking at between the 0.236 Fibonacci ratio at about 51 cents and the 0.382 at about 56 cents. So we are facing some resistance here. Now, this particular setup in raw price action looks a little bit bullish, you guys. I'm not going to color code anything. I'm not going to pump any stock. I'm only going to give you what the chart says. That's it. Excuse me, you guys. Drank a lot of water, right? Okay, so before we continue, there is a price objective for this massive descending broadening wedge, and the price objective is usually the genesis of the formation, so that being about $1.23. So that is a massive pump away, you guys, and there are obstacles for us to be able to consider before we move to the upside. Okay, so first of all, let's turn on our volume weighted average price on the 8-hour. VWAP is actually below us now, so we can actually start using this as a form of support. But VWAP is not typically something that everyone looks at on a larger time frame. VWAP is definitely used for momentum traders, day traders. I'm just pointing out what the relevance is right now, you guys. So we have moved above the 7-day exponential moving average. We can use this as support now for a continuation to the upside. As you can see that we've been actually using the 7-day as a form of resistance on the way down, which is similar to the 10-day simple moving average, which is right over here. You can see that we've also used it as resistance to the downside. We have now moved above both of those moving averages and can be used as a form of support for this continuation. A couple things to notice here is that let's just make sure that that is the 30-day. Okay, so this is the 30-day exponential moving average, which has some rhyming with our 0.382 and also our resistance from the wedge. So this is likely an area of an obstacle to really, penetrate through, you guys. We do have a couple catalysts coming up this week. The Fed rate hike is going to be on Wednesday, the Fed meeting, and jobs report on Friday. So the markets could be a little pensive right now. We could be at an indecision, but this is in my opinion, it's looking bullish for IMBI in particular, you guys. So let's go ahead and move on to the next chart for IMBI. I noticed that we are in a falling wedge for IMBI, and we have recently made a break out of it. So if there were going to be some bearish action, it would be likely to come back and test the newly converted resistance into support before a continuation to the upside. It looks like we broke out here, and this is one 4-hour test, which is usually aggressive. So aggressive traders would take the 4-hour as a confirmation that we are now confirmed within this, but they're, the likelihood of coming back is pretty high, you guys. So we could see a touch back to, notice something here, you guys. So this candle, when we were trading during these 4 hours, we were trading within the golden zone, which is in between the 0.618 Fibonacci ratio and the 0.382 fib. So we were trading within this area here for a couple iterations now, it shows. So we have now moved above it. So if we can find support, we would likely find support at the 0.618 at 50 cents, followed by a potential touch to the 49 and 48 cent at the 5 and 382. Before a continuation to the upside, you guys. We do have a couple areas of resistance within this as well, starting with the, let's just make sure that one now is the 30-day. It is. This is a 30-day exponential moving average. Has some rhyming with the 1.272 at 50 cents, and the 50-day moving average is, it's pretty much right at the 1.618. So this could be a very desired area for us to go. Now, this wedge does have an implied target for us to review. We can actually take a trend line from this area down here, from the hypotenuse of the triangle to the very bottom of the triangle here. And we can take that trend line and put it right over here, which you can see this was that very trend line. So we take it from the top to the bottom, and then we apply it to this area right here, and now we have a zone for us to take a look at. So not only is it rhyming with our this is the 100-day simple moving average, but it's also, we have a zone here. If we can, let's take this box. Let's take this box so you guys can see. So we can draw like this and see that right in between this zone is the 3.618. Now that 3.618 is also a golden ratio. So you're looking at about 76 cents in the best case scenario. This is also very reminiscent to the breakout of other falling wedges. Usually triangles like this tend to realize or break out when they are about 70 to 75% complete. This, I would suggest, is probably a little shy of 70 or right at 70 at breakout. Actually, we could be 70, 75, right, you guys? Please let me know in the comments below if you disagree or agree with the analysis that I'm performing for you guys. So it is reminiscent to other triangles breaking out at this point. So it is pretty much in accordance with that typical behavior of falling wedges or triangles in general. So we could see some upside, and we're actually going to validate that direction by using some momentum indicators, or we can actually use an RSI as well. But let's look at the notes here and see if we're on the right path, you guys. Okay, so that is it for this chart. Let's go ahead and move on to the 12-hour read here. So this is a 12-hour, and we're looking at an RSI right here, you guys. Before I get started with that, this is for the new listeners. Please listen up. Apologies to my regular listeners, as they have to listen to this almost every single video. This is a regular RSI setup, you guys. I have split the RSI into two halves, the upper half being the bullish control zone, and the bottom half being the bearish control zone. We have the bear weakness percentile at the lower half, and we have bear weakness at the upper half. Now, inversely, we have bull strength and, bull weakness percentile, and this is bull strength percentile. So if you hear me talking about those things, you'll know what I mean. Anything above 70% is your overbought area. Anything below 30% is your oversold, just like any other RSI. So the trend lines that you're looking at here are drawn by me. These are iterations of bullish divergences that are currently or potentially going to be in play within the next session or two. So this one is a little thicker because it is a phantom drive of bullish divergences going through all the price action. So, and now we have two regular drives of bullish divergence here as well. And this drive and this drive are potentially in play right now as we speak. So this is a bullish statement for the IMBI asset. Please notice here that the signal line of the RSI is breaking out of the bear strength percentile. We still need the moving average to help us on the way up as well. When we're in these deep zones of the bear weakness percentile, we're likely to be gravitated to the downside. But the pivot of the RSI is suggesting an upside. Okay, now let's open up a multi-pane and look at a few time frames so that we can get an overall picture of where the price action can actually go for the next trading session. We're going to start with an immediate short-term time frame. This is a 30-minute. And I'm not going to lie, you guys, if you're actually seeing all of my videos, I'm going to be posting up about 4 or 5 today. I've already recorded 3 for AVCT, CMRX, and I believe it was and this one here, you guys. So I'm noticing this on all of the tickers. I'm noticing that we have kind of a neutral direction, a suggestion from our indicators, and this is likely to what's to the catalysts that are going to be happening mid this week with the Fed meet and the jobs report on Friday. So usually when we see, you know, at least as professional traders, when we see this type of price action, or indication or suggestion from indicators, we tend to not trade them. But let's continue on to see if we can see or gauge more of a bias. Let's look at a micro time frame. This is going to be the 15-minute. It's also giving us the same thing. The only reason that I'd believe that we may have some upside is simply for the fact that we're sitting within the bullish control zone and bull weakness. But like I said, when we're in the shallow areas of either the bull weakness or the bear weakness, we're likely to be gravitated to one another. So this can indicate a potential session of sideways trading. But let's go ahead and move on to a higher time frame. This is going to be the bi-hourly RSI. As you can see, it's also direction neutral. The only thing good here is that we are in the shallow areas of bear weakness, and we are above the moving average. So those are bullish things. Let's look at the 4-hour. 4-hour is suggesting upside. It is suggesting upside, but within bear weakness percentile. It's not quite at the shallow area, so it's do or don't with this one, you guys. It's very much in line with these things right here. I like to see upside pivots when they're passing this area here or deep into either zones. So now let's look at the 6-hour and see if we can look at this, you guys. This is ridiculous. We have an upside pivot. It is suggesting upside. However, it is in the deep areas of the bear weakness percentile, which means that we can be gravitated into bear strength. Another type of indecision. Let's look at the 8-hour and see what it's got for us. 8-hour is this is a larger time frame, you guys, and I would give this a little more weight. So this is suggesting potential upside by mid-session tomorrow, maybe. And it has made a bullish cross above the moving average, and it's now approaching the shallow areas of the bear weakness percentile, which means that we can be gravitated to bull strength. I'm sorry. Wow. I can't speak English right now, huh? To bull weakness, you guys. So now let's look. We already saw the 12-hour, so let's look at the daily. Daily is also in a sense of indecision, you guys. Let's see the bi-daily. Bi-daily is also just doing that number, you guys. This is a very dangerous time to trade. There's no guessing as to what the Fed is gonna say on Wednesday, you guys. So I mean, look at these time frames; they're all facing that way. Yeah, you guys, I'm not a financial advisor. I can't actually suggest for you to buy or sell any asset. Please take whatever I do show in these videos as a form of entertainment. Do your own DD and we'll be okay, right? But I wouldn't suggest entry on these. I actually don't like to play Fed plays, you know, because I don't know if you guys have noticed, but macroeconomists have been right all of every single time the Fed has made an incline in our rates. So if we're getting negative reads like that, chances are they're going to be wrong again. Everybody's talking about a 50 bip hike, but I honestly do not see that happening, you guys. We could potentially face a bull trap on Wednesday of the likes that you haven't seen before, man. This can actually trap crypto longs and traditional market longs. But that's just my opinion, you guys. I don't think we're gonna see the 50 bip hike on this time around. It's probably gonna be for a Santa Claus rally. They're probably gonna save it for the next meet, right? But this is actually a pretty good place for me to leave the video off. But before I do so, please, subscribe to the channel. I'm going to leave the links below so that you guys can join the Discord. That's the ARCa server. And Twitter, please follow me on Twitter. I post all the time. And you can ask me questions right here. We can always discuss this stuff further than the videos, you guys. But with that said, I'm going to leave you guys off, and I'll catch you at the bell. Adios.